We have Ravikant Bhat of IDBI Capital joining us. Thank you so much for joining us, Mr. Bhat. Clear beat of what the markets were expecting. This is the second PSU bank to do that.
Yes, it's a clear beat, but I was looking at some of the numbers flashing on the screen, and I believe the NPAs have also gone up. Yeah. There are a few things. One is, of course, there is stress, goes without saying, but in the previous interaction that the PNB management had, they had indicated that the recoveries were going to be very strong. So, that's one particular number that we should be looking out, because one of the, some recovery number had been shared by the management, and that had been a recovery for just 1 month, and that was quite strong. Now, if we are saying that the recoveries have, let's go with the assumption that the recoveries have been strong, and despite that, the gross NPA ratio has gone up. So clearly, we need to look out what exactly is happening over here. While the profit is quite good, looks like the operating profit possibly has moved quite a bit, and the provisioning also has been quite a bit. So let's look out for more details.
Right, and I guess we just have to wait for which way that moves. You're absolutely right, because the profit number is dramatically high. We'll have to see how that came through. We can see that the gross NPA has gone to 13.75%, and we actually had hoped for about a 12.8% gross NPA. And as I was saying, we'll have to look at that slippages number as well. Slippages anywhere below 6,500 crores should be fine. What kind of slippages would you be happy with, Mr. Bhat?
The last quarter was outsized. If it's falling to somewhere in the region of 50-60 billion, let us say it's beginning to normalize. But I'm seeing, the operating profit is flat QOQ. I've got some of the numbers. The operating profit is flat QOQ. And there was, and then the provisions have fallen quite by almost to almost a fourth of what they were in previous quarter. So that's quite a bit of a. So possibly we are going to hear some commentary on improving slippages, and improving slippages, as well as the possibility of a NPA ratio improving going forward.
Right, Pankaj Podar has also joined me at the moment. Pankaj, quite wild numbers that we're getting, because if you look at it, our estimate suggested a 42 crore loss, and now we are getting a massive profit, but our estimates on the NII, Punjab National Bank, has turned out to be lower than our poll of about 3,900 crore. Even on gross NPAs, we estimated about 12.8, 12.9, and they've not been able to do that. They're quite high right now. I think Gaurang Shah is also with us. Gaurang, what do you make of the numbers?
Well, I think improvement and deterioration both has come in the same package. And while the estimates on the loss number was definitely there, but they are surprised with a positive number, and I only hope that there are no extraordinary items or any ARC sale. I don't know about it, whether the breakup is available or not. But the commentary from the management in terms of improving the gross and net NPA levels, I think that should reflect going forward. What are the sectors which has contributed? Definitely may be kind of a helpful input, but at the same time, since we are speaking about it, we have a reduced recommendation on PNB, and maybe we might revisit the rating post another quarter or two numbers.
Pankaj, you have
right, Gaurang. Right, Gaurang, I just wanted to understand about the gross NPA bit. Gross NPA is at 13.7%. Even if, say, somebody was expecting that number, or let's just quantify it into an absolute amount. So 56,000 crores of gross NPA. You still, have to look at, this on an absolute basis?
Well, Pankaj, I think we need to have some breakup and detail. But yes, these 13.7, it's not something that one was anticipating as far as our estimates were. And like I mentioned, if the management is saying that they have put in they have put in efforts to improve the situation, it does not reflect post the numbers that they have delivered.
Right. Ravikant, also just looking at the gross NPA number, so 13.7 of course is a percentage number, but the absolute number is up 1.5% QOQ. So after the AQR process, after that, Q3, Q4 being particularly very bad, 1.5% increase, still needs an explanation?
Well, gross NPAs will always need an explanation because given where they are, the street we would generally expect at some point of time they start declining. So irrespective of how much they have risen or whether they should have risen at all, the question to look at is how they are going to decline going forward. Fine. They have gone up on a sequential basis, but the commentary I would look forward to is when they would start coming off, especially in the a backdrop of what the management had previously said about the recoveries being strong. So one is the slippage number, and why wherever that slippage number is, why is it so? And two, if the recoveries have to be strong, then I would ideally expect maybe in a quarter or two, the gross NPAs to start declining. So, to answer your question, they have gone up, and they would still need an explanation as to why they are still moving if the recoveries were to be strong.
Yeah, from the press release, I just want to take out one point, Mr. Bhat, and I would like you to explain this to our viewers. Point number 7 in the notes that they've written, that during the year the bank has revalued immovable properties based on the reports obtained from external independent valuers. The revaluation surplus amounting to 964.24 crore is credited to revaluation reserve. What could you break that up for us? What would that mean?
No, this follows the RBI allowing banks to consider revaluation reserves as part of Tier 1 capital. Previously, these used to be a part of Tier 2 capital. This basically is nothing but revaluing your fixed assets, and it's a balance sheet phenomenon, nothing to do with the P&L. Yeah. To the extent that they have revalued, I think you should see some addition happening to the Tier 1 capital. PNB in the past, if you track the 10-year balance sheet, you will see revaluation happening at periodical intervals, and it's just that this used to be a part of Tier 2 capital. Now it's a part of Tier 1 capital. Not entirely. I think it's about 45%.
Okay, all right. There is, in the case of, I think we saw Canara Bank, I think we saw some write-backs from the previous provisions that they had made. In this case, that hasn't happened, but a provisioning amount is lower this time for the food credit taken by the State Bank of Government of Punjab. Now, last I think quarter they did about 166 crores, and this time that part of the provisioning is 78 crores. So that's another thing that is worth pointing out, because that showed up in some other bank numbers as well. Pankaj, you have more questions.
Right. Ravikant, I just wanted to get the NII bit as well. So NII came in about 150 crores lower than estimates. I just got the loan book detail. It's down 5% at 3.5 lakh crore. Does that surprise you that loan book is contracting?
No, but then you would expect it to contract in the first quarter. So I am not surprised it's contracting. I would rather look at it, even if I were to, be building a growth, in the loan book, I would ideally, I would typically have it back-ended more in the second half. So loan book shrinking in the first quarter is not surprising at all. That could also be one of the reasons, apart from the NPAs, why the NII has underperformed. Because if one were expecting, an improving balance sheet, QOQ, the NII should have been more in line. But this is more of a simplistic explanation. There are more elements to the NII. You also need to look at how the loan yields are moving.
Right. Gaurang, what would you say about the miss on the operational front? That's the NII bit. Okay, I think we don't have Gaurang with us. Ravikant, just coming back on the provision and the gross NPA number. Provisioning, of course, reduced, but last quarter was an abnormal sort of a quarter. But this time also 2,700 odd crores, the number that we have seen. overall you get a sense that at least the worst in terms of asset quality is behind. Is that something that you can say, or you would want to listen to the management commentary and what happens in the next 2-3 quarters?
I would want to rather listen to the management. Because
Right.
there have been,
the
enough moments in the past wherein, one would have said possibly the worst is getting over and the worst never got over. So I would rather, listen to the management.
Right. As far as, the overall, probably you look at Canada Bank numbers, slippages were broadly in line. We saw a little bit of increase as far as their gross NPA is concerned. Similar trend seen in PNB as well. So as of now, the two banks that have declared, broadly similar, broadly similar in trend?
Yeah, but the trends are kind of similar, but I don't know. I mean, the outlook is something which is more important.
Mr. Bhat, if we just look at the breakup, and I'm just looking at the segment revenue, in 2015, the same quarter, we had retail banking had a revenue of about 6540 crore. That has come down to about 3463 crore this time, 3463 crore. Corporate and wholesale banking has almost doubled. Were you expecting this because in some other banks we've seen the reverse happen?
Well, I can see the segment revenue. This needs an explanation. As it is, we don't, look at segment revenue very how it's classified. We go by the more regulatory disclosures on the P&L and how those numbers are moving. So maybe there's some noise over here as to how this number is specifically reported. But I won't read much into it. I would rather look at how the P&L is moving.
Okay, all right. Thank you so much, Mr. Bhat.